Hey, this is Warren Redlick. We have an unusual episode of the AI Stocks Report. We have the SpaceX IPO filing that was just done. So I've looked through the filing in detail. I'm going to give you the details. We're going to focus on the AI portion of the filing. What happened with the AI filing that really matters that's going to get you going. This is the cover of the IPO document, just so you can see it, not much there. There's a lot of detail in the IPO document that is going to help us understand what's going on with SpaceX and AI compute. So you can see up at the top, believe operators with superior model to compute integration, the ability to efficiently support and allocate compute across both training and inference workloads are best positioned to win the AI race. This is what I've been saying, especially inference compute. They're talking about training compute as well. I'm focused on inference compute, so they're pushing both. We expect the long-term economics of AI companies to be driven by the ability to consistently deliver bleeding edge compute at the lowest possible cost per token. We view cost per token as a function of three primary inputs: the underlying AI model, the compute hardware, and energy. And we expect to have a competitive advantage in the latter two cost components. They're right out there saying we won't necessarily have the best model. This is the company that runs Grok that is being competitive, saying we won't necessarily have the best model. We'll have the best compute and we'll have the best energy. We believe we have a pathway over time that will significantly reduce compute hardware costs through continued vertical integration and development of proprietary chips, building on our experience designing custom silicon for our Starlink satellites. We also expect that the marginal cost of energy for our AI compute satellites will be minimal because our satellites are powered by solar arrays in space. By driving the energy component to minimal levels and pursuing improvements in compute hardware cost, we believe we can achieve meaningfully lower overall cost per token in the future. I'm going to break down some numbers about energy cost as it relates to a deal. There was a deal with Anthropic that was revealed in more detail in the IPO document. We're going to talk about that later. And part of that, we're going to talk about the energy cost. We have a dual speed and cost advantage in terrestrial AI compute, not just space compute, but terrestrial compute. Our first principles thinking enables us to build coherent compute at scale and at rapid speed with lower costs than most other companies in the industry, not all. In order to bring compute clusters online as fast as possible, we employ a vertically integrated, nimble approach to construction. So if you remember, and they describe it here, how quickly they set up Colossus 1 and then Colossus 2. And if you get your compute cluster built faster and you get it operating faster, then you start getting revenue on it faster. You start getting benefit from it faster. Your cost of construction is inherently lower if you spend less time doing it. We said at the bottom, we demonstrated a significant improvement in cost efficiency, achieving data center construction costs for Colossus 2 that are considerably lower than industry benchmarks on a per megawatt basis. You need as much inference compute as possible and need it as low cost as possible. If the customer wants your intelligence, but they either can't get it because you don't have enough inference compute or they can't afford it, there's your problem. Regarding the satellites, again, I'm focusing on the details that are relevant to the AI part of the story because this is AI Stocks Report. We're going to get to the rest of the IPO later in this video. We're going to talk about the AI stocks, what happened. We had Nvidia earnings yesterday. We had some other stuff, but the big focus of this is going to be on SpaceX. Regarding the AI, we expect to begin deploying our orbital AI compute satellites as early as 2028. That's 2 years from now. I think they start deploying in 2028 or early 2029. They don't deploy in volume until 2029 or 2030, right? This is that they start off by launching a few and see how it works out before you start launching en masse and really trying to build a huge constellation and figure out how are you going to make all that work. It's easy to think about it in theory, and they know a lot from Starlink, but that's a big chunk of it. Now, a meaningful detail here was CapEx. AI CapEx for 3 months ended March 31 for the first quarter of 2026 increased $5 billion to $7.7 billion. So they did $7.7 billion in CapEx in the first quarter of 2026 for XAI, basically. The increase was primarily driven by investments in the rapid expansion of our terrestrial data centers, including the development, construction, and equipping of new facilities and supporting infrastructure. I think this is Colossus 2, which is not completed yet. It's possible there's a Colossus 3 that's underway we don't know about yet. AI CapEx for 2025 increased $7 billion to $12.7 billion. So that was a big jump, right? They're spending a lot on CapEx. This is actually the biggest CapEx that SpaceX is spending. They absorbed XAI, and their big spending is CapEx on their AI data centers. Now, this sounds like a lot of money. We're going to dive into the business model with Anthropic later in this video, and you'll start to see, oh, wait, that's a good plan. It sound, wow, why are you spending so much on data centers? You'll see. I don't know the exact number. Nobody knows yet. Guesses are that they will raise $75 billion from the IPO. They'll sell shares to the public. The public will pay in money to SpaceX. SpaceX will get its hands on capital, estimated $75 billion. Could be $100 billion. We'll see. We intend to use the net proceeds from this offering to fund our growth strategy, including the expansion of our AI compute infrastructure. First thing they mentioned, AI compute infrastructure. Enhancements to our launch infrastructure and launch vehicles, increases in the scale and capacity of our satellite constellations, and any remaining amounts for general corporate purposes. SpaceX is more of an AI company at this point than they are a space company, right? They're going to be a space AI company with the space AI satellites, but they are putting a ton of money. And if you raise $75 billion, if you spent, $12 billion last year on AI data centers, and now you got $75 billion in the bank, how big of a data center are you going to build? Now, I want to talk about the Anthropic deal for a second. Just note that I signed up this morning for IPO alerts with my broker. I'm hoping to participate in the SpaceX IPO. I don't expect that I will get access to enough stock for it to be a really large amount, right? I'm guessing if I'm lucky, I get $50,000 in SpaceX stock in the IPO, and that's worth putting in. And I'm willing to sell $50,000 in Tesla stock. That's not a huge part of my portfolio, and it's worth getting in on SpaceX now. There's a theory that there's going to be a merger and you would get a better deal on SpaceX stock from your Tesla stock then. I'm not worried about that. I don't think that's going to happen. If it's going to happen, it happens. But this is an opportunity to get in now. I'm getting in now, if I can get in at all. There's a lot of critics of the IPO. I'm going to show you more of that later. The ones who criticize it are ignoring the Anthropic deal. There's a massive revenue stream from Anthropic paying SpaceX to use the Colossus clusters. Massive margins, and SpaceX is likely to build more compute clusters quickly, right? This is a great revenue and margin source, why not build more? You get a big cash flow coming, so you can invest in other things like more AI compute, AI satellites, Starship. It gives them a lot of cash to work with. This is from the docs, from the IPO docs. We have the ability to use compute resources to support our proprietary AI applications, such as Grok 5, which is currently being trained at Colossus 2, while also providing access to select compute capacity to third-party customers, right? So the deal is they're letting Anthropic use Colossus 1 and part of Colossus 2 while they still use Colossus 2 for Grok. In May of 2026, we entered into a cloud services agreement with Anthropic to access to compute capacity across Colossus 1 and Colossus 2. The customers agreed to pay us $1.25 billion a month. That's $15 billion a year. It's a lot of money. This structure allows us to monetize unused compute capacity in our infrastructure while still permitting reallocation of the capacity for our internal initiatives if needed in the future. We have sufficient capacity to provide compute for our own AI models, including support of our training and inference demands, and to satisfy the obligations under these agreements. So it's not clear. We know that Anthropic is getting all of Colossus 1. It's not clear how much of Colossus 2 they're getting. I don't know how to answer that question. We expect to enter into additional similar services contracts for compute capacity with third parties. To the extent we become compute constrained due to internal and external utilization, we would need to expand our compute infrastructure. They're going to expand their compute infrastructure. They're going to build more data centers on Earth and eventually in space. But they're going to build more compute. They're very obvious that we're really good at doing this terrestrial compute. We do it at low cost. We do it really well. We do it really fast. Obviously, there's going to be a Colossus 3 and a Colossus 4. So my friend Brian posted, and I didn't include his post, he talked about $7 billion in CapEx. I think that's unreasonably low. Colossus 1, he was talking about Colossus 1. Colossus 1 has 220,000 GPUs. The estimated cost for just the GPUs is around $8 billion. The total CapEx for building Colossus 1, probably around $12 billion. The deal with Anthropic includes an undisclosed amount of Colossus 2. It might be a lot of it. My hunch is it's less than half. So my wild guess is that the total CapEx between Colossus 1 and Colossus 2 for the compute that's been allocated to Anthropic is around $20 billion. And it works out to around $500 million a year in electricity costs. Remember, I mentioned before, if they have solar satellites in space, that electricity cost goes to zero. If you amortize the $20 billion over 10 years, that's $2 billion a year. If you add another $500 million a year in operating costs, which is probably conservative, it's probably less than that. That's another billion between the electricity and the operating costs. You end up with $12 billion a year in operating profit, not gross profit, operating profit. I checked carefully on this. On $15 billion in revenue for an 80% operating margin, not gross margin, operating margin 80%. That's a good business. That's a really good business. And there's a ton of demand out there for compute. So if you build another compute cluster and you can get more customers who want to pay you more for compute, and you're able to get 80% operating margin on your compute, you build more data centers. And this pays for itself. If you think about this, if you get $12 billion a year in operating profit on $15 billion in revenue, you've basically paid off your CapEx in a little over a year. That's including the amortization in there. If you take the amortization out, you pay it off faster technically. Great return on investment, great business going forward. You just end up having this massive revenue streams, this massive cash flow that allows you to invest and build more compute, build more satellite manufacturing, build more launch capacity. It's a very, very big business. And because it doesn't really show up in the revenue stream doesn't show up in the financials yet. We're going to see the financials at the end of the video. This revenue stream doesn't show up in the financials yet because they haven't gotten the revenue yet. When they have their IPO and they have their next quarterly earnings, you're going to see this revenue stream and you're going to say, oh. So the critics don't see that. I did sort of call this almost correct. Back in May, the announcement was made that SpaceX was going to provide access to Anthropic AI to Colossus 1. It only being Colossus 1, I estimated that Anthropic was paying at least $500 million a month, and it could be $750 a month or more. I said the SpaceX IPO documents will need a revision. They got it. I said $750 a month or more if they got 300 more megawatts from Colossus 2, 300 megawatts of compute from Colossus 1, 300 megawatts for Colossus 2. That leaves like 700 megawatts in Colossus 2. Now you're double that number and you're in the ballpark of the 1.25 billion. So I did a pretty good job of predicting that. I'm not always right, but I was reasonably close on this call. I didn't know about Colossus 2, but I was reasonably close on this call. This is the AI stocks report. So let's briefly talk about AI stocks. The stocks, most of the stocks in our AI SRX index, the AI stocks report index, had a banner day yesterday. AMD crushed. ASML went up a lot. Tesla went up. Everybody had a good day except for Google being flat. Nvidia reported earnings, which we'll talk about in a minute. So this number was before earnings. Earnings reported after the market closed. I've added a new index, the AISRY index. These are my numbers. Maybe there is another AISRX and AISRY out there, but this is my secondary group of AI stocks to track. Most of them were up. Marvell Networks was the biggest. Micron up a lot. Oracle up a lot. The hyperscalers were up. Some of the networking hardware and infrastructure companies were down a little bit, probably just typical volatility. On Nvidia's earnings report, $81.6 billion in revenue beat the expected number. It was another beat. Nvidia beat expectations. Data center revenue is $75.2 billion, 92% of total revenue. Nvidia is basically a data center supply company. Earnings per share, $2.39 versus prior $1.76. Non-GAAP EPS, $1.87. Beat estimates. Another beat. Gross margins, 75% roughly. That's normal for them. Net income, $858 billion, a strong increase driven by revenue growth and other income. Good numbers for Nvidia. They returned $20 billion to shareholders via buybacks and dividends in the quarter. They announced an $80 billion additional share repurchase authorization. This is, if you're a long-term investor, I tend to think, no, I want your company to invest money in growth. I want you to build more capacity to develop chips. I want more hardware. I don't want you to give me cash back. I gave you the cash. I want you to reinvest it in the business. But it's very common when a company gets this big, and Nvidia is the largest market cap in the world, to start handing out cash to investors, and some investors want that cash flow. They guided for $91 billion in revenue for Q2, above expectations. They did not include any Chinese data center compute revenue. Gross margins about the same, operating expenses about the same. So Nvidia basically reported good numbers. What I saw aftermarket numbers, the stock went down a little bit aftermarket, but I don't really worry about that. We'll see what happens this coming morning. Back to the SpaceX IPO, we've received indications. I don't know how reliable this story is. There's some media reporting that BlackRock is trying to buy 13% of the entire SpaceX IPO in one order. So, a large asset manager wants to get a large piece of the action. And we've heard from Ron Barron that he put in $1 billion order. Ron Barron from Barron Capital, my recent video, I talked about Ron Barron's take on SpaceX. The IPO is already 10x oversubscribed before BlackRock even entered. So this is why when I say I let my broker know I want a piece of it, you can try to get in on the IPO. You're not going to get that much because everybody wants a piece of this. A lot of investors think this is going to go big. Okay, we're going to talk more about the details of the IPO, but I just wanted to touch on, I looked for criticism and I found some on X. So John Gavin, an unverified account, got 16,000 views for this one. Space Exploration Technologies is a low float, dual class, no earnings, bad governance, internal controls shortfalls, overhyped piece of IPO garbage. Old Elon and his advisors will love all the money they make on it. The smart money cloud will steer clear. Is BlackRock the smart money crowd? Is Ron Barron the smart money crowd? Who's the smart money crowd? I don't know who that is. There is substance. Low float. They're releasing maybe 5% of the company in the IPO. There will be more shares available as employees and others sell their shares once it's an open market. There's going to be some restrictions on when they can sell, but once they can sell, there'll be more shares available. 3-6 months, somewhere in that ballpark. I think there's a staggered release of it. Elon doesn't get to sell, and he's probably not going to sell. Dual class, the structure is that Elon owns almost all the voting stock. I think the Class B shares are 10 times as much vote as the Class A shares, and Elon owns like 90% of the Class B shares. So Elon has dominant voting power over SpaceX. No earnings. Well, no earnings yet, but we know that Starlink is booming, and we know that the data center business is booming. Both very high margin businesses, both growing very fast. So no earnings now, and they are investing a lot of money in CapEx, so that may be a drag on earnings for a while, but there's a lot of profit obvious in this company. Bad governance, this is common with a controlled company, and this is in the disclosures in the IPO documents that, Elon basically controls the company. Your vote isn't going to really matter. He doesn't have to have independent directors. He has a lot of freedom. So if you are looking to invest in a company where investors have a vote, where there's a lot more protections for investors from the danger that the people who run the company are going to screw you over, this isn't your company. Overhyped? Overhyped. I'm not sure I would call this overhyped. They have like 80% of the mass to orbit. They have a network of 90s. They have like 75% of the active satellites in space. They are a dominant launch provider. They now are like one of the major data center providers, one of the big hyperscalers, and they're one of the lowest cost hyperscalers. They have a lot going for them. He didn't address Anthropic at all. He didn't address Starlink at all. He just threw out a bunch of garbage. Another critic, this SpaceX IPO is a huge sham, massive exit liquidity for Elon and his boys. Elon's not selling. Elon's not selling a share. He's holding every bit. The valuation for SpaceX is laughable. If this valuation is true, ASTS is worth $200 billion tomorrow morning. I don't even know what ASTS is. Elon has the NASDAQ and all these other institutions changing rules to provide exit liquidity. Pretty amazing. Very easy trade by ASTS. Where's the substance? What do you think about Starlink's future prospects? Ron Barron said it's going to be worth $14 trillion in 10 years. What do you think of that? No answer. What do you think about the deal with Anthropic that's generating 80% operating margin on $15 billion a year in revenue, and there's probably more coming? What do you think about that business? Nothing. And this idea that Elon's going to sell, like, really? You think Elon's going to sell? Like, why would he sell? He doesn't need money. Unless he's got some startup we don't know about that's coming. He's going to do a genetic startup or something. Quantian says a Chamath special purpose acquisitions company has more respect for public market investors than this. This is the ultimate exit for 2 decades of VC bags. They're going to jam this down everyone's throat, and if it destroys the industry, blah, blah, blah. Casey Jacobson says the single worst account on this site was perpetually wrong. Thinks the most innovative. By the way, there's no substance in this guy's criticism. Thinks the most innovative company of the century is going public and being mark to market is some affront to justice. Don't buy it, But if you use Starlink, you get it. So Ben says, don't buy it then as a bad take and a blatant misread of the original tweet. The SpaceX IPO is a joke. You didn't have any substance. Like, you didn't talk about, it wasn't this guy, but neither one of you has talked about Starlink. And Starlink on all your flights isn't worth close to $2 trillion. No, but 300 million subscribers paying $1,000 a year with 80% margins is worth more than $2 trillion, right? There's a lot of value there. If you do the math on that, right? Think about that for a second. 300 million subscribers, $1,000 a year each. That's $300 billion a year in revenue, 80% margins. What is that? $240 billion a year in gross profit? $2 trillion is low. And that doesn't count the data centers. Like we've already seen it. Like, the data centers are going to be 80% margin. This is like a massive high margin business with massive markets, massive TAM. We're going to talk about the TAM in a minute. So I haven't found better criticism than what I just showed you. I've been looking for it. I actively spent an hour looking for better criticism of the IPO, and I didn't find it. So on the fun side of the IPO, we got things like future plans, point-to-point terrestrial travel. We've seen that before, Starship Earth to Earth. I expect to be a beneficiary of point-to-point terrestrial travel. When I fly from Bangkok or Singapore to New York, it's typically over 20 hours. Starship's going to do it in 40 minutes. Now, there's going to be travel time to the spaceport and all that stuff, but it's going to reduce my travel time dramatically. I think that there is a large market for point-to-point terrestrial travel. It will make travel much more pleasant. It probably won't be much more expensive than what I paid, what I'm going to pay for my round-trip flights. It'll cost more. I don't think it's going to cost that much more. And I'm probably not going on the first flight, but I'm going, baby. And this can be fun too. I'd probably puke, but it's like 5 minutes of oh my god, oh my god, oh my god. It's like 20, 30 minutes of like, and then it's like another 5 minutes of oh my god, oh my god, oh my god, and then you're there. Would you rather have a 40-minute roller coaster ride or a 20-hour misery? I don't know. I think I'm going for the roller coaster ride. Space tourism, I'm in. I want to go to the moon. Bucket list. I want to go to the moon. I'm 60 years old now. I think by 70 I'll be going to the moon, and I'm working out. I'm staying in shape, so I qualify physically. I'm going to the moon, baby. I'm gonna walk on the moon. In orbit manufacturing sounds cool. There's already a little of that happening already, but I'm sure there'll be more. Passenger and cargo transport to the moon and Mars. Energy production on the moon and Mars. Lots of solar. Manufacturing capabilities on the moon and Mars, and asteroid mining. Think big, boys. But if you think that's thinking big, I have a feeling this is the first time that anyone has ever mentioned the Kardashev Type 2 status in an SEC filing. Their long-term goal is to get to Kardashev Type 2 status, which means using all the energy of the sun, or getting close to it, using as much of the energy of the sun as possible. That's bold. I don't know that anyone has ever claimed they were going for Kardashev 2 status in any kind of SEC filing or any government filing ever. So pretty cool stuff. Now, a critical detail I want to talk about that has the Tesla influencer community, the Tesla fan community going crazy is, oh, Tesla's going to merge with SpaceX, and then us Tesla shareholders aren't going to get our fair share in the merger. Very important detail, and I read this document thoroughly. There is zero indication of a merger between Tesla and SpaceX in the IPO documents. The closest it's come, see the last sentence down here, they're collaborating on macro hard, running state-of-the-art processors, cost-efficient next-generation Tesla processors, and then they're collaborating on Terafab. Okay, and these are complicated, and there's issues and there's details that they got to figure out. And they talk about the benefits of the collaborations. Great stuff. But we plan to explore other areas of strategic collaboration with Tesla in the future. Is that an indication they're going to merge? No. because they're talking about strategic collaboration already in a not merger situation. If they said we're planning to explore a merger with Tesla, they would say that. And they didn't say that. And there's a critical point here that I want to stress as an attorney. When I see this, imagine you were buying stock in SpaceX in the IPO. And then 2 weeks later, 3 months later, after the IPO closes, they announce they're merging with Tesla. And it wasn't in the document. This is the document that tells you what you're going to buy, the IPO document. And it's not in there. And then something goes wrong and the stock falls. And it's credibly attributed to the acquisition of Tesla going wrong. Then you sue SpaceX. There's a class action lawsuit in Texas Business Court, which is one of the requirements of the IPO documents. You probably have to sue in Texas Business Court. Maybe you get away with suing in another court. The people suing win. They win the lawsuit. If you didn't tell them you were going to merge with Tesla, and then you go ahead and merge with Tesla, you say, well, we didn't know 3 months earlier. And Elon makes a coy look when in an interview and, never gives a straight answer. If they merge if they merge in end of 2027 or 2028, all right, no big deal. But if they merge within 3 months after the IPO closes and then something goes wrong and shareholders can say, hey, I got screwed, there's going to be lawsuits. SpaceX is going to lose the lawsuits. It's not a good plan. If they were seriously considering merging with Tesla, they should have disclosed it in this document, and they didn't. James Stevenson lays out his numbers above. I didn't bother including them for what the valuations are today and what that means for who owns what share of what of the combined company. And I said, I read the IPO document thoroughly, and I didn't sleep well last night, by the way. And I didn't notice any mention of a merger with Tesla. Where did you guys find it? Larry Goldberg, love Larry, love Steve, love James. We didn't find it. As I've repeated again and again, I think he said it once, but maybe once to me and said it to other people. This cannot be discussed by any of the participants until well after the IPO and probably until after the lockup, which would be 6 months. I don't know if it's a year, 6 months after. I get that you were skeptical, but it's my judgment that this is only a matter of time and market conditions. But James was using, you have to see James's post, James was using the current market caps for determining the valuation. And I'm going to say this again, a buyer of SpaceX stock based on this IPO disclosure would have a spectacular lawsuit against SpaceX if a merger with Tesla happens anytime soon. If after 2027, maybe it flies. After lockup isn't good enough. I'm buying stock in SpaceX. You should tell me what I'm buying. If you have even remote, if you're thinking of acquiring Tesla, merging with Tesla, you should have told me. They could have included in the document. It wouldn't have stopped anybody from buying into the IPO. Who's going to not buy into the IPO if they said they were going to merge? Everybody's talking about it anyway. They could have included it. We're considering merging with Tesla in the future, but we don't have any current plans. Could have said that. Didn't. That would have insulated them from the lawsuits if they said, we're considering a potential merger with Tesla. It's in the beginning stages. We don't have any plans. It's not definitely going to happen, but it's something we're considering and shareholders should be aware of it. That would be fair disclosure. It's not in there. A little bit on the financials. There's a lot of details about what they spent, what their earning, what their revenue was. And I just wanted to point out here, the connectivity segment, which is Starlink, had adjusted EBITDA of $2 billion. So Starlink is profitable. And that was for the quarter. And on the year, income for operations was $4.4 billion and EBITDA was $7 billion. So Starlink is doing well. Connectivity segment is Starlink. We get to the CapEx segment. CapEx for our space segment was $1 billion. For our connectivity segment was $1.3 billion. And our AI segment was $7.7 billion. And then for the year 2025, that was for the first quarter. For the year 2025, Capital X for SpaceX was, for the space segment for launch, was $3.8 billion. For connectivity, Starlink was $4 billion. And for AI was $12.7 billion. So they are spending more money in CapEx on AI than they are spending on space and Starlink combined. This is an AI company that happens to have satellites and rockets. SpaceX is an AI company. They had this great graphic talking about the future total addressable market for all their businesses. So Space Solutions, $370 billion a year. Starlink broadband, $870 billion a year. What did I say? $300 billion a year. They seem to think there's more Starlink value there than Ron Barron or I was projecting. $870 billion in Starlink broadband. Starlink Mobile, another $740 billion. So they've got $1.5 trillion in revenue from Starlink. $1.6 trillion in revenue from Starlink, and I was saying 300 billion. That's a big business. Just right there, that's a big business. That's worth way more. That's worth more than the $14 trillion that Ron Barron was talking about. Then you've got AI infrastructure, $2.4 trillion in spending. It gets worse. $760 billion in consumer subscriptions to AI. $600 billion in digital advertising, and then enterprise applications of AI, $22.7 trillion. So they see a potential market. Now, total addressable market means market that they can reach and others can reach. So they're sharing the enterprise applications market with Palantir, with Anthropic, with OpenAI, with Google Gemini, with others. It's not like we're going to get $22.7 trillion in revenue, but the Starlink broadband and mobile, that they don't really have competition. They might get 10% of this market over here or that market over there, but they get 80, 90% of this market. I thought that was a very positive, upbeat projection. Just where they're looking for the future, we expect to commence deploying our next generation V3 satellites. This is the larger Starlink satellites that only fit in Starship and don't fit in Falcon 9. Designed to offer 1 terabit per second of download capacity per satellite using Starship in the second half of 2026. So they're expecting to have actual launches of Starlink on Starship, the new Starlink satellite on Starship in 2026, second half of the year, which is theoretically 2 months away. And we may have a test launch tomorrow, the 22nd, 23rd, something like that. We expect that a single Starship launch will be capable of deploying up to 60 V3 satellites to low Earth orbit, representing a potential 20-fold increase in Starlink downlink capacity deployed relative to a Falcon 9 launch. So Starlink is going to grow very fast, be able to provide more service at lower cost to more customers. That's a good business. And I've said before, I see first mover advantage here. No one's going to be able to compete with that. If you were going to had to invest $100 billion to build out an AI satellite network, and then compete against somebody who did it at lower cost and is better at it and already has the customer base, are you going to invest your $100 billion? Are you going to make any money in this business? I mean, Bezos is still investing in it, but as Ron Barron said, well, that'll just be a niche business. He's not going to be able to compete with Elon at scale. Just a final note, if you are a paying supporter, as a YouTube channel member, as a Patreon supporter, as an X subscriber, you get access to my options videos. I do roughly one a week where I talk about long-term option strategies for investing in AI. I have a specific metric for evaluating long-term call options that both helps you understand long-term call options and really helps you understand long-term investing in general. So please consider supporting me by becoming a X subscriber, a YouTube channel member, or a Patreon supporter. Thank you so much for watching.